Hey everybody, how's it going today? Well, in this video, I want to talk about a consumer products company that I've had on my radar for many months now. They've been stuck in a long, grueling downtrend, but they recently came out with very good earnings and could be on the cusp of a bullish breakout. Now, I'm going to tell you who this company is and why I think things could be turning around for them. Now, if you're new to the channel, I like to find short-term and long-term trading and investing opportunities in typically lower-priced stocks. I like to find undervalued, unappreciated stocks with high growth potential and talk about all other things finance-related as well. Now, if that's something that might interest you, please consider subscribing so you don't miss any future trading and investing ideas. And also remember, I am not a financial advisor, so please do all of your own research before buying any of these stocks. The name of this company is Coty Incorporated, and they are a world leader in beauty and home to an illustrious roster of cosmetic, skincare, fragrance, hair color, and styling brands. Coty was founded in Paris all the way back in 1904 by a French perfumer and businessman named Francois Coty. Over 100 years later, with brands like CoverGirl, Clairol, Burberry, Lacoste, Gucci, Hugo Boss, Calvin Klein, Adidas, Nautica, and many others, Coty Incorporated is a brand name powerhouse. This company is now the largest fragrance maker and the third largest global seller of cosmetics. Now, Coty has three divisions: Coty Luxury, Coty Professional Beauty, and Coty Consumer Beauty. Coty Luxury focuses on prestigious fragrances and skincare, and Coty Professional Beauty focuses on servicing salon owners and professionals in both hair and nail, while Coty Consumer Beauty in turn focuses on mass color cosmetics, mass retail hair coloring, styling products, body care, and mass fragrances. Coty Luxury Brands is all about celebrating unlimited beauty in luxury fragrances, high-end skincare, and color cosmetic products. The role of this division is to fulfill their customers' aspirations with sophisticated creative execution and an uncompromising quality of products and services. This portfolio includes world-renowned brands such as Marc Jacobs, Calvin Klein, Chloe, Gucci, Hugo Boss, Tiffany & Co., Alexander McQueen, Burberry, Kylie Beauty, as well as skincare brands with Lancaster and Philosophy. Coty Consumer Beauty helps millions of people around the world express their beauty their way. Thanks to a rich portfolio covering color cosmetics, retail hair color and styling, body care, and mass fragrance. These brands include global icons like CoverGirl, Max Factor, Rimmel, Clairol, Sally Hansen, Adidas, and Nautica. With more than 1 billion products shipped each year, they offer endless possibilities for self-expression. Now, Coty Professional Beauty exists to elevate professional beauty. They are one of the world's two leading professional salon companies, the leading salon brand for thinning hair with Nioxin, and the preferred styler in key markets with GHD, and also the #1 nail brand worldwide with OPI. Their other brands have shaped the history of the salon industry and include Wella Professionals, System Professional, Sebastian Professional, Londa Professional, Sassoon Professional, and Clairol Professional. Now, getting back to Coty's business model for a minute, they believe marketing and brand names is all about engagement with the customer, and until the time the customer is convinced, the brand won't sell. We are surrounded by many brands, and their names become a natural part of our everyday speech. But it's very difficult to determine why many brand names have a recall value and others don't. Brand names create an identity that people can associate with. They create perceptions and they let customers know what to expect, and there is a lot of power in brand names. When it comes to a company product or name, it can be one of the most valuable assets a company possesses. The power that brand name comes with is the fact that they can lend credibility, assure quality, and set customer expectations. Now, Coty recognizes this, and they have been acquiring a very impressive collection of great brand names. Now, back in 2016, Coty closed its deal with Procter & Gamble and successfully acquired 41 beauty brands under the specialty beauty business banner. As a result of the merger, Coty then boasted approximately $9 billion in revenue and has become the third largest beauty company in the world behind L'Oreal and Estee Lauder. After the merger, they became #1 in fragrances, #2 in salon hair, and #3 in color cosmetics. Now, although this deal looks great on the surface, the deal with Procter & Gamble cost them approximately $12 billion, and I think they drastically overpaid. They're still saddled with huge debt from it, and that's the main reason, in my opinion, why the stock is still trending down. It looked like things were starting to improve and they started knocking out some of the debt, but the pandemic occurred and sales took a hit. But with this latest earnings report, things look like they may have turned back around in the right direction again for Coty. Now, Coty became publicly traded in 2013 and began trading around $17 a share. Then in 2015, it reached a high of just under $33, but since then it's been in a slow, grinding, excruciating downtrend. Now, it has flirted with trying to break this downtrend in 2018 and in 2019, only to make another sharp move down to a new low soon after. Now, Coty's been on my watch list for many months because it is in the middle of a beautiful falling wedge formation on the weekly chart. Now, this is a bullish pattern, but since it's on the weekly chart, it could take a long time to break out. So the hard part about these patterns after you spot them is patience. Now, on November 6th, Coty came out with quarterly earnings, and they posted a profit of 11 cents per share, beating the consensus estimate of a loss of 7 cents per share. Now, this compares to earnings of 7 cents per share in the year-ago quarter, and these figures are adjusted for non-recurring items. Now, this quarterly report represented an earnings surprise of a positive 257%. But last quarter, Coty was expected to post a loss of 8 cents per share, and it actually produced a loss of 46 cents per share, delivering an earnings surprise of negative 475%. So as you can see, their earnings can be all over the place, and I will need to see some more consistency in their earnings for me to get more excited about the current earnings report. But it's definitely a step in the right direction, and hopefully they can keep it up. Now, Coty is continuing to add to its brand by adding strategic partnership deals. Last November, Coty announced that it will take a 51% stake in Kylie Cosmetics, the blockbuster beauty brand by Kylie Jenner, for $600 million. The deal values Kylie Cosmetics at $1.2 billion. Together, they will focus on global expansion of the brand, with Jenner and her team maintaining the lead on products and communications, including social media. Coty expects the transaction to add to net revenue growth by more than 1% annually over the next 3 years and be neutral to earnings per share in the first year, but add to earnings per share thereafter. Kylie Cosmetics had estimated revenue of $177 million for the 12 months prior. The deal is expected to close in the third quarter of fiscal 2020. And in somewhat related news, Coty has agreed to acquire a 20% ownership stake in Kim Kardashian West's beauty business for $200 million. Under the terms of the agreement, Coty will have overall responsibility for the portfolio's global development in skincare, hair care, personal care, and nail products. Kim Kardashian West's KK Beauty line is a major seller for Ulta, which began carrying the cosmetics in late 2019. The transaction is part of Coty's renewed emphasis on its beauty business and the ongoing effort to become more agile and focused, said the company. They also said Kim Kardashian is a true modern-day global icon. She's a visionary, an entrepreneur, a philanthropist, and through social media has an unparalleled ability to connect with people around the world. The acquisition is expected to close in the third quarter of fiscal year 2021. Now, when you do business with the Kardashian, there's always a but, and typically a big one. And in this case, it's more debt added to Coty's already hemorrhaging balance sheet. All right, if we jump over to Seeking Alpha, we can take a look at their financials real quick. And I think this is the main problem with Coty while it's still in that downtrend. It's because they're still trying to work through this debt. And after the pandemic, it looks like they are going in the wrong direction again. But if we look at their revenue, we can see that their revenue in 2016 was $4.3 billion, but then after that P&G acquisition, it almost doubled to $7.7 billion. Now, the concerning thing is as we go along, we see in 2018 it went down to 6.8, went down to 6.3, and then, of course, this year it went all the way down to 4.7. A lot of that can be attributed to the pandemic shutdown, but it is definitely not going in the right direction. And if we jump down here to gross profit, we can see in 2016, $2.6 billion. After the acquisition, it almost doubled to 4.6, but now it is trending in the wrong direction, down to 4.2 in 2018, 3.8 in 2019, and with this pandemic shortened year, it's down to $2.7 billion. So that is not a good sign. And if we jump over to the balance sheet real quick, And we can take a look at the cash that they have on hand as well as the total debt. If we take a look at the cash, we can see from the acquisition in 2017, it jumped from 372 in 2016 to 535, but has been pretty much trending down ever since. In June of 2018, it was at 331, popped up just a little bit to 340 in the next year, and then this year, of course, it's all the way down to 308. And if we go down to the debt, let's go down to the total liabilities here, and we can see in 2016, 6.6 billion, but of course after that acquisition with Procter & Gamble, debt ballooned up to 12.7 billion. The following year, 13.1. Following year, 12.7. Was actually at 12.6, but they rounded up on here, and then now it is back up because it is up to 12.7 again. It's actually 12.705, but in the year before it was 12.6, so we can see that it is trending in the wrong direction again, unfortunately. But with these latest earnings that just came out that were very good, hopefully they can get things turned around. I think that they will. I'm pretty confident they will now that the economy is starting to get going again. So this is one I'm definitely going to keep a sharp eye on, even a more close eye in the coming months, because of the numbers look like they're already starting to improve. All right, well, here is the current daily chart of Coty Incorporated, and as we can see, the market is really liking the earnings they came out with. It has been up big the last several days. Of course, the whole market has been up big. We are in the midst of the Biden breakout, so stick around till the end, because I think that there is a transition of leadership happening as we speak, and it's very interesting seeing the group of stocks that are starting to gain momentum and some of the other ones that are being left behind. It's actually catching me by surprise, but let me get through this Coty chart and we'll jump into some of those other ones. But getting back to the Coty chart, we can see that there's going to be some stiff resistance right here around the 6.25 range, maybe 650 range. Yeah, it's probably around the 625 to 650 range, and that's still a long ways away from the current price, even though we've had this huge move up. And if I back it out a little bit, we can see that this resistance, it goes all the way back to January of 2019. So this is going to be some formidable resistance. Let me back out to the weekly chart, look at that descending wedge one more time. And this is a very, very, very nice looking descending wedge formation. And unfortunately, this is on the weekly chart, so every one of these bars represents a week. So these can take a long time to play out, so you have to be patient and wait for the breakout if you want to play it safer. And if you want to get in earlier, then it's more risk, but you have the higher potential of gain if it does end up breaking out. But I usually like to wait for the breakout if I can. Unfortunately for this one, the breakout is super high. You know, we're talking a breakout around the $8 level. I like to see a breakout and then a pullback down and a touch of the trend line again. That's usually the safest entry for me, but it is going to take a long time for that to play out. But being that this is on the weekly chart, these patterns are usually more reliable. But like I said, the only caveat is it takes a long time for them to play out, so you got to be patient. But let me jump over to some other stocks that are very strong in the market right now. That kind of surprised me a little bit, but it looks like they are finally starting to turn around, and this could be the time to start piling into some of these stocks that have been getting crushed by the pandemic. It looks like some of them are finally starting to turn around. I wouldn't say they're out of the woods just yet, but all the cruise lines, all the airlines are starting to pick up strength because there has been good news about a vaccine. And if that comes out, then it is going to be these stocks that have been getting beaten down because of the pandemic. They are gonna rock. And in hindsight, you always see, you're like, man, I should have got into these when they were low, but there's always a lot of risk down here, you know. So there's always a lot of uncertainty. That's what keeps these stocks down. But once they get out of the woods, you know, that's when they start to run. That's why I like to accumulate them. I like to pick like one, maybe two, and start accumulating when they're low. Don't put a huge part of my portfolio into it, but if they do get that turnaround, it could be a nice big gain for me. But if we look at some of the other cruise lines, this Carnival Cruise Line is the one that I happen to be in, and it's actually the weakest of all the cruise lines. Um, Go to Royal Caribbean, we can see that that one is stronger than Carnival at the moment, and actually has been stronger the whole time. Carnival has fallen off the most. But if we go to Norwegian Cruise Lines, oops, we can see that Norwegian is it's pretty similar to Carnival Cruise Line. Maybe just a hair stronger, but certainly Royal Caribbean is the strongest of all the cruise lines. You know, back in the March low, we were looking at it around $20, and now it's about 75. If we go back to the one that I picked, Carnival Cruise Line, the low was around $8 or so, and now it's at 18. So a little bit more than a double for Carnival, and Royal Caribbean is more than a triple off the lows, approaching a quadruple off the low if you were lucky enough to catch it around the $20 range. But let me look at some of the other stocks that were beaten down by the pandemic. American Airlines having a very strong day, even though I'm not too thrilled about the American Airlines chart. Go over to Southwest Airlines, we can see that they are performing much better. You know, they have a much better balance sheet than American Airlines. Let's go to Boeing. Boeing is look like it's starting to break above and get above that 200-day simple moving average. Boeing could be out of the water. I mean, they are still in financial dire straits, but I don't think the government is going to let them fail. So this one could be a couple years in the making, but it could have made its bottom already. Another stock that I hold that's doing very well because it was beaten down by the pandemic is Disney. You know, with the prospects of the parks opening back up eventually, that's going to be a huge revenue boost for Disney. So I was glad that I owned Disney, and I'm glad that I was accumulating it this whole time since the pandemic lows, because you know, Disney's not going anywhere. Their streaming service, I think, is going to be very strong. The theme parks are always going to be strong. You know, also you got to remember they have a cruise line as well, so that is part of their business that's been getting hurt. And once the cruise lines get going again, that'll be another big revenue boost for Disney. And Disney, we can see that it's already back to the level when it fell off during the beginning of the pandemic. So despite going through everything that it went through, it's right back to where it was, and the business hasn't even completely come back online yet. So that is an excellent sign for Disney. Another group of stocks that are doing well today are the oil stocks, which is surprising, being that Biden is in office now, and he's saying he wants to transition away from the fossil fuels, but a lot of them are performing very well. And let's get to another sector that is doing super well that I am invested in is the real estate investment trust. These could finally be turning the corner. But this is one that I am invested in. Oh, it is turning around as I speak here. What's going on here? Oh, no, I guess it pulled back earlier in the day. I thought it was near the highs. But anyway, this is one of my real estate investment trusts. Another one is Simon Property Group. Simon Property Group is finally showing some signs of life, popping above that 200-day simple moving average. This is one that I do not own, but I probably should, and that is Stork Capital. I got a little note on there. That's one of Buffett's favorite real estate investment trusts. I put little notes on there so I don't forget about them, or I know why that I put them on my watch list. But Stork Capital is a very good one. Another one that I do own is LTC Properties. Man, that one is selling off a little bit too. I checked that earlier in the day when it was at the highs, but I guess maybe the real estate investment trusts aren't as strong as I first anticipated, because they were up big on the day when I first looked at them. But real estate has been getting beaten down by the pandemic, and once we get out of the woods, I'm telling you, these real estate trusts are going to be much higher in a few years. I'm probably going to be looking back right now saying I wish I would have bought more of these, because these are probably going to be at least twice as high in a couple of years. Plus, I'm going to be collecting all those dividends on the way up. And I should have accumulated probably more shares down here, because once it gets into the 50s and 60s, that will be a nice capital appreciation gain for me. Plus, like I said, I'll be grabbing all those dividends going into the future. So even though I have been buying a lot of these real estate investment trusts, I do think I am going to look back and wish I would have bought more, because these are just great income producers, and you don't see them fall off very much, but once they do, they usually get bought up pretty quick, and they're usually higher a few years down the road. Plus, you get to you get to collect all those dividends on the way up. But let's jump over to some of the stocks that I was actually quite surprised that they are underperforming, and a lot of them are the tech names that I was expecting to be strong coming out of here. You can see Apple has barely moved on the day despite the markets being up big. I know the Nasdaq is pulling back some, but you know, you would expect Apple to be strong. I don't think Nvidia is doing very well today. Yeah, Nvidia is actually down on the day. Let's see what else we got here. My favorite stock of all, Tesla, is doing almost nothing. I mean, up 1% on a day when the market is up big. Another stock I own, Skyworks Solution. I mean, it's pulling back. It's probably going to end the day down, maybe. I mean, the market could turn around and head higher into the close, but it looks like a lot of these tech names are going to end up down on the day. Another one that I own is CRISPR. CRISPR is just kind of hanging around there, and then let's go back to the averages. You know, if we look at the Qs are breaking out of that consolidation, and for whatever reason, a lot of the tech names aren't following them up. You know, if we look at the spider, the S&P 500, we can see we got a big breakout above the previous resistance, and it is holding it, so that is always a good sign. Let's go to the diamonds. Diamonds are up big, way above the previous high that made in September, so the market is liking what it sees post-election. So there's no reason to believe that this market is going to roll over just yet. But another area of stocks that I was surprised were so weak were some of these lower-priced biotechs that are involved with creating a vaccine. Look at Inovio is getting absolutely crushed. HTBX, Heat Biologics, you know, they are having a terrible day, down 8% on a huge up day for the market. Another one is iBio. I know some of you guys have this out there. iBio, and that is not a good looking chart at all at the moment. Sorrento Therapeutics, I mean, that one is getting absolutely crushed all the way down to the 200 period simple moving average. So these lower price pharmaceuticals are not looking so good at the moment. Another sector that's getting beat down pretty good is gold and silver. You would expect gold and silver to pull back now that the market is breaking out to new highs, and that is exactly what's happening. So another one that I have that is not performing so well is IPOB. It is still holding above that 8-period exponential moving average, but I would expect that one to have been higher today, but it is not. It is not moving into higher ground. So definitely an interesting shift in the market. I think some of those stocks that have been getting beaten down by the pandemic, I think the coast is almost clear for people to start piling back into them. The no sale order, I believe, has been lifted. I believe that ran out at the end of October. So the cruise lines should be getting back to business as usual slowly. But the market might have finally turned for some of these beaten down stocks. And once it looks like it's more official that the turnaround has already started, you're going to see institutions piling into these stocks. They are going to be jockeying for positions to grab some of these stocks, because if they get back to where they were before the pandemic, they are extremely undervalued at the moment. But that is what I am seeing in the charts right now, guys. I definitely want to keep a close eye on this new leadership that has emerged, and I am going to look to get into some of these at when they get around, when they pull back to support, and I'll let you guys know what I am seeing when that happens. All right, folks. Well, I'm going to end the video right there. Let me know your thoughts on Coty. Also, let me know in the comments section if you own the stock and where you bought it at, and what are your thoughts on them going forward. If you have any other information on them that I didn't cover, I would love to hear more about it. And also, let me know what you think about some of these beaten down stocks being strong today. Do you think it's just a head fake, or do you think the bottom is in on these stocks that have been beaten down by the pandemic? But let me know anything else you want to talk about down there in the comments. Please like the video if you enjoyed it. Subscribe to the channel if you haven't already. Thank you so much for watching my video. And until next time, take care, everybody.